Sure. When I see the tweet, I'll put it, or the link, I'll put it out there.
All right. I'm going to put that we're live on Twitter as well, if that makes it easier for you.
Yeah, that's fine. That's better too.
All right. I send you the link and then I'll put the tweet.
Cool.
All right. I put the link out.
All right. I'm tweeting.
So one of the first things that I notice about HEX when I look at the charts, because the first time I saw the charts, I didn't see that all-time high yet. The chart was performing quite well versus a lot of other cryptocurrencies on the charts. Thinking back, buying HEX when I did around the 5 to 6 cents mark was pretty dang good. Pretty good opportunity for me. And then after it went to all-time high, like a lot of us started taking profits, but then it did a big dip. Richard Hart talked about the Pulsechain sacrifice phase, and we noticed people started swapping their Ethereum and USDC for HEX, and it went from like 11 cents all the way to 33 during the sacrifice phase. Did you sacrifice for any Pulsechain during that time or leading up to that time?
Yeah. Are we live now? I don't know if
we're live.
Oh, that's great. So it's good to be here. Just first presentation. I'm Gary, known as FundingGym, and we had tweeted back and forth. I went through some of your content, and I enjoyed some of your content. I'm just going to basically present the case of a hexagon, someone that believes more in staking than in trading. And then when you're talking about the history, there's a lot of history that you can see on charts, things like the ROI of buying a dip, selling a top, whether it's a local top or the all-time high. You can see those numbers. But I think that a lot of traders miss out on the additional numbers of what the yield is on staking and adding that to what their ROI would have been if they had a timed event. So they had a timed ladder. So we've had a couple of, in HEX, we've had a couple of different events, one of which was with a launch phase that also had an element called big payday, where people that staked even for a single day generated, I think the average was 30% more coins. So that was a narrative back then. And you saw price performance as the event was coming up, just like any other buy the rumor, sell the news event. And then you saw that people did stake for a single day. And if they did make yield and they had that only intention, then you saw price go down, just like any other major event of a launch. So that number for people that believed in the product or the project or the concept of staking, those people are still generating yield on top of that event from 2 or 3 years ago. And that's why you see high APYs of 60%, 70%, 100% for those people that still are staked. Some of those stakes are even coming out, as soon as or have already expired, because they just staked out a year or 2 years post that event. So I just wanted to highlight that when it comes to trading. And then also you were asking about the price performance when you got involved, which was, I think you said around 5 cents. If you got involved around 5 cents, I know that the price, from my recollection, in July of 21 was maybe it was in the 30s or something, somewhere around the 30-cent-ish range when the first sacrifice was happening, which would have been Pulsechain. And then I remember that the price did move, and there's all kinds of explainers that people can go through, and they can look at blockchain and see what was actually moving the price and why there would have been a game theory strategy for maybe the top wallets that sacrificed to push down the price after their sacrifice and create a greater gap in between the next positions, basically, of this sacrifice narrative. So there's all kinds of things that I don't think a trader will see on chart. And part of the reason to join you with stream today is maybe to point you towards those extra bits of information to even give you better judgment on your trading strategies.
I'm looking over the screenshot you sent me. I'm going to pull up the picture of your stake real quick, and I'm going to explain your stake to the viewers. So it does look like your stake did start at the same day for 3 of your stakes. And then one stake started a lot earlier, about 31 days earlier. And this is just one of your wallets, correct? Just one of your wallets.
Tell me if it's on screen. I don't know if it's on screen.
It's on the screen.
Okay, so I just don't see it.
So this is the one that you started on day 978, and it's about 200,000 HEX per stake.
Yeah, so I don't see that screen, but I'm going to tell you what the 4 stakes are. So I remember that Hexologist is a popular streamer, and I remember that he was going to come back to streaming for 555 days. And I recall hearing about that maybe a couple of days after. So what I did was I put money into a new wallet, and that new wallet I wanted to utilize as part of his daily content and say, hey, if you're going to stream daily, then this will be a 555-day long stake of $1,000, I believe is what the number was. But he was already a few days into his basic plan of 555 consecutive days of streaming. So it might have been like a 553-day long stake. That's one of them. And then the others are, again, I bought all this, I think on market, that maybe the same day, was I had moved money into the wallet, and then I had decided that I was going to make 3 separate stakes of $10,000 worth of HEX, market bought. So I market bought it. You can see the transactions. You could see where it came from and all these things like that. And then I staked one $10,000 bit for 1 year, the second for 2 years, and the third for 3 years. And basically that was because I was very involved with the launch of George Gammon, Jason Hartman, and Ken McElroy's mastermind in real estate and other networking. And I was using it basically as a go-to. I didn't have to show or dox my own wallet and have people say, hey, you got involved back in 2019. Of course you have those kinds of gains. Like you got in before it went 10,000x. So I was using it basically as, okay, well, I'm going to put skin in the game at the starting point of now. And so I committed to the stakes and I committed to the buy just as a display of a doxed wallet. So when I looked at it right before our stream and I gave you that screenshot, that's what that is. That's the staking history. And that is, I think at today's price, $30,000 is worth 41,000. I think that's what I looked at just now. And then it doesn't come out for a little bit more time, like in August of this year is when the first stake would come out. And then the plan for the other, you can see inside the wallet, if you actually look at the address, is you can see that there's $20,000 USDC that's waiting. And it's simply waiting for basically trader to take a challenge with me if they choose to. It may be you, it may be others. But basically I'm going to say, okay, if you're going to trade and I'm going to stake, then my plan is $10,000 bought at market when there's an Ethereum bridge available for Pulsechain. Then that 10,000 will go into purchase of Pulsechain, and 10,000 will go into purchase of PulseX. And then whatever mechanism is on chain and available in protocol for those 2 products for single side staking, not to be traded, but single side staked, then it will be in that protocol only, and it will be there for 2 years. So that's my plan with that capital.
Yes, I see that. It's about 30,000 USDC. That's pretty good. I did my sacrifice for the Pulsechain, well, for Pulsets. So on day 1, I should already have my tokens, and I looked back at the HEX chart all the way at the beginning, and on day 1 was chaotic. Originally, you're going to get these tokens at value of 0, so it's non-taxable event. But then as traders start buying them and swapping on market, there's low liquidity in the very beginning. So sometimes you might see a 900 or even 1,000% swing up in the first 10 minutes. And then finally people provide more liquidity and price could go back to where it started and then drop 300, 400%. That's kind of like what HEX did, and then start shooting up and down. But over time, HEX has performed very well. Like using the ROI calculator on Nomics, even now, like even the price you put on that last stake, like showing that you could get in late and still make it, HEX is up still more than 1 cent from that area. So you got about 4.9. HEX is still up by more than 20%. And on top of that, you're also getting yield because of your T-shares. One thing that I find interesting about your stake, though, like your second stake has a lot more T-shares. So it's almost as if somebody ended a stake and then you started that second stake. So that is something to consider as well. Like
I haven't looked, but I'll look at the address again.
The staking calendars. Sometimes if a big stake ends, or somebody ends a stake early, it might encourage other people to load up on their stakes. Or if a whale on Twitter decides to dox themselves and brag about dumping if Pulsechain doesn't get out soon, they might dump their hats at the bottom, and people like me that are traders like to jump on that and get in because we can see that long-term value. As a trader, I mostly do like spot trading, but I do futures trading on the side, dabbling. And I know that a lot of traders can get wrecked in futures. I think Richard Hart says, leverage, liquor, and ladies. Like those are the 3 sins. But with everything in life, you have to take it with like not your whole bags. You don't want to give like your lady your whole bag. You don't want to give liquor your whole bag. You definitely don't want to give leverage trading your entire bag. Like for me, leverage trading, I like to do anywhere from 1,000 to 10,000 per bag on scalps. Nothing more generally. I don't like to add more. And it's worked out for me so far. And I try to use like $0 liquidation strategy, stuff like that. Whenever I do make profits.
How much of your trading strategy takes into account the timing of the trade, which may be indicated by the chart? You know, I don't know what charts you're looking at as far as how close or minutes or 4 hour and things like that, like how specific you are about your timing of your trade versus the cost of gas, or trying to time the transaction cost, or even taxable events. Like how do you strategize your trading history, your trading of HEX when it comes to that?
Uniswap has a new feature for people like me, thankfully, for the smart trades now. So it's lower gas fees. It's so that you don't get front run. And when I see HEX like completely revolt, like after a Richard Hart tweet about Pulsechain update and we just run, I don't buy it up there because I already have it before that event. So in my mind, what Richard Hart did, he's a catalyst. So for my HEX trading strategy, anytime we get like a major dip, I like to accumulate it and stack it up, because I know that we'll have catalysts like the Pulsechain launch that will make it run. So lately I haven't been taking profits on my HEX because I know that catalyst is going to come and make it run. After the Pulsechain sacrifice before, instead of taking profits on HEX, I sacrificed my entire bag of HEX for one of my bags. But then I also have like 3 stakes staggered apart. So right now it's accumulation strategy. And then maybe after Pulsechain, if HEX runs drastically, I might take some profits, set it on the side, leave it in the USDC. And if other whales start dumping, causing it to drop hard, I'll consider swapping the USDC for the HEX. And gas fee is very minimal. My last swap was about $7 worth of USDC. Well, the Ethereum gas fee was about $7 total. And then my buddy that swapped, he maybe paid about $34 because it was prime time. It's about lunchtime here in the United States. Gas fees are like $34 for one swap. But then he swapped it when HEX was around 4.8 cents. Because HEX went up to like 5, dipped down a little bit. He swapped it right there and then held it till then. Now we're at 6 cents. HEX and Doge are my two.
Like Access Alive, or I think that's his channel. He walks through what is liquidity available on V3 and V2. Do you get into the liquidity before you make a decision, or is it all chart?
Yeah, liquidity. So that's the other thing. I do that with futures trading as well. When you run out of liquidity, price will go through the roof. And that's why Richard Hart warns people that if you're doing futures, you can get wrecked, especially shorting, because when there's no liquidity, that's when coin goes parabolic. Bitcoin did not go to 25,000 out of nowhere. It came there because less liquidity. People just start buying it up, pulling it off exchanges. And when people did those large market orders before, like, there's not enough liquidity. HEX is the coin that I like because it has one of the lowest liquidities and one of the lowest trading volumes. So the people that get in late really pay the price. Like, they'll end up paying 10, 15 cents. And that's the fee of being late. They'll get in, but that's the fee of being late.
When you analyze, let's say, Doge or Link or something else that might, just have a name recognition, do you treat the charts the same, or do you really get into the weeds about like things like this liquidity or who can move the price by tweet?
Well, sometimes you have to go a little bit deeper than charts. You go into the fundamentals of the coins. Like Luna, for example. Luna and USTC have the minting capabilities. You take some USTC, use it to mint Luna, you can sell that Luna for $1 worth. And the cycle continues. So when I was shorting Luna, the number one thing that I saw that I tried to warn people, supply is drastically increasing. You can't increase the supply drastically and maintain the same price. And it wasn't just increasing by 100 tokens here, 100 tokens there. It was like 1 billion per hour. And then eventually it went to over 1 trillion tokens. So I got lucky when I started shorting it. And generally I didn't short that much during that time. So I shorted Luna around $86. KuCoin closed us out under a penny. They're like, force close. Like, they were done. They closed it. They removed it from futures trading pair. And then for FTT, sometimes you're watching the news or Twitter, you can see CZ Binance says, I'm gonna sell my whole bag. So if you see somebody that big say they're gonna sell their whole bag of something, and you have the means to short it without going over leverage, people like me short it and then ride it all the way down to the bottom just for those nice screenshots and for the gains.
Is there a preferred shorting platform that you trust, or is it all basically risk, as far as the platform itself? Because, something like FTX or something like, if they do offer it, I don't know how much liquidity they have available for. I don't understand shorting enough to actually know the trust factors. When they were showing, they were showing the wallets and saying that they had liquidity available, like with this whole thing that CZ had to do after FTX collapsed. Do you take that into account?
Yeah, you have to take that into account. So here's what future platforms have. They have an insurance fund for every single coin. And if they're transparent, they'll tell you how much money they have in that fund so that traders can look it up so they can know the risk. Because if that fund runs out of money, then it's going to just force deleverage your positions. It's not that bad when you're in big profits. But if you're in a big loss, negative, and it's something like Luna. Say the people that went long on Luna, let's say they bought it at $50 thinking it's going to go up, ignoring the fact that supply was increasing drastically. Well, they would have been deleveraged and their position would have been close in a loss because the insurance fund for the futures ran out of money. Lately, I've been noticing like there are some exchanges that are definitely getting less trading volume, and that raises some red flags. Like I could see another black swan happening in the crypto trading space. That could give us another big drop just because some of these places are running out of customers and have problems. I don't like KuCoin anymore because during the FTX crash, for some reason, when people try to short on FTT tokens, KuCoin closed their position and said they were going to delist it. But they took it a step further, waited until FTT dropped to like $2 and then relisted it back on futures. So I thought that was like a little bit sketchy. I got lucky though. I was trading on METC Global. They're based out of Singapore, a little bit tighter regulation in Singapore. And I was able to keep my FTT short open from 22.40 something all the way down to like $2. And when an asset is going down, the most an asset can go down is like 99.9999%. So taking profits at $2 versus $1 is still very similar. It's only going to be like a little bit different. So there are like, I trust METC Global for my futures trading. KuCoin, you can get away with it here and there sometimes. Binance just did some really shady stuff by force liquidating a lot of those Australian positions. We need more regulation because that should never be happening. Because that action caused a lot of other people to get wrecked on their position that were not Australian. So there's not any really big players yet. But in America, we have TD Ameritrade and we have Fidelity that are starting to get into crypto futures. But for some of those accounts, traders need anywhere from $100,000 to $150,000. They have to be registered, and everything's like automatically tracked. Everything's automatically sent to the IRS. So we do need more regulation.
Because of other assets that people invest in. Real estate, like I said, I talk a lot about real estate. I talk about I've never really played the stock ticker game. I usually have preferred something tangible that I could force the value in. I could bring up the value of a property because of the tenant base, or I could bring up the value by improving the property itself or something. So I have stayed out of intangibles for most of my life. I think 2017, maybe 2015 was some speculation on some startups that did well. I used to run a startup accelerator also. But outside of that kind of like, I'm betting on the person or I'm betting on the IP that they might have some protection around, and say, okay, maybe that'll turn out well. So that's my speculation in intangibles until 2017. And then 2017, I started my journey in cryptocurrency thinking of it very similar to startup culture. It's like, oh, okay, they're going to make a pitch. They're going to do a fundraise. The fundraise is going to have some accountability. I wouldn't say through regulation necessarily. I would say through protocol. I believed more in the math or the protocol and the person standing at the card table, at a pitch, basically saying why you should bet on their idea. And one of the people that I met in 2017 at a card table at an event in Santa Monica was Alex Mashinsky. And Alex was pitching the idea of Celsius. And his background story was that he had founded or invented voice over IP. He exited other companies in the past. And now he's going to enter this cryptocurrency game by being regulated and compliant. And that regulation and compliance also probably was a pitch that FTX and BlockFi and others have said to government about how they transact or they protect users' funds. That's not the case. So even when you say something like, it's terrible that the Australians got forced liquidated and that impacted other people and that there should be more regulation on platforms, I don't think that that's really any more useful than any other ticker in other marketplaces. They're just less volatile because they're more familiar. Like you can go to TD Ameritrade or you can go to your broker and say, I want to buy Tesla and I want to short Apple. These are just tickers, right? So like, I like the fact that things are on blockchain. That's why when I was sharing that screenshot and that Twitter handle, that's me basically saying, here's my participation as a user. Here's what I'm speculating on is that this will be popular in the future, that staking statistically, if someone takes me up on the challenge when Pulsechain and PulseX launches, I'll put the 20 grand toward those two products and see what happens. Like it's a bet basically for me. But most of my time, I don't want to spend it's great when you have, a lifestyle and you enjoy, you create content, what your platform is about creating content. And, I think you probably provide your viewers indicators about the shapes of patterns on charts and things like that. But to me, that's too much of my time spent, and I don't like playing that game. I like to buy, long term, hold, and promote through peer-to-peer conversations. That's why I'm here also.
Yeah, that long-term approach, it does give you a lot more free time. I respect the free time. I like to come with the strategy too, so I can stop trading within the next 2 to 3 years. But I also enjoy it because I grew up in a different age. When I was a kid, we would play RuneScape like 8, 9 years old and trade items on that game. So people my age were like used to trading. My grandfather had a bookstore. He used to go to flea markets. We go to flea markets, buy stuff, and sell it. I like the idea of crypto though because I don't have to touch anything with my hands, package it, and deliver it to somebody else. That takes time to me, so crypto saves me a lot of time. And trading, what I'm doing with trading, I could do swing trades. I can make it so I do 1 trade per month as well. But I like this day trading. I like scalping, connecting with traders in the community as well, because I find that if you're doing it every day, you're up to date, and when something big happens, you can jump on that something big. I was able to do that at least 2 times this year, like shorting Luna, shorting FTT. Those were 2 big ones. And then I got to sacrifice for Pulsets. So I can't count it. It's not valued at anything yet, but I think it's up there. It's supposed to be valued at 0 when you receive it, so it's not taxable.
What are your thoughts about the design concepts? Have you gotten into have you played with the platform of PulseX, even though it's going to have a different consensus model with ETH 2.0 instead of BSC? But the platform itself of PulseX, I don't know is going to change. I think that the buy and burn feature is what everybody likes to talk about, and K4K and others go through the math in that regard. And then they speculate about like what kind of volume will or won't come over to play on that DEX, whether it's going to be comparable to Pancake or Sushi or Uni or something like that. What are your thoughts about like how to play trading on a platform that has a buy and burn feature? Like, will you collect incentive token? Will you try to stack PulseX? Will you try to stack Pulsechain? Like, where's your base in your trading?
I've already ran the math, like with my trading of HEX. If it's anything like HEX, it's still more profitable holding it than trying to do that yield farming. Because if you're just holding it liquid and it gets a random spike up, you can take profit, and a big drop you can buy down. And at the end of the day, you'll accumulate more HEX that way. You'll accumulate more Pulsechain that way, I believe. The good thing about trading on Pulsechain though, Richard Hart made it so that the TATS is not able to be changed. Uniswap can sometimes come out vote to change the TATS, so Pulsechain does have that slight advantage for me. And the way that the PRC20 network is, it does allow room for a lot of tokens to do the yield farming early when there's not a lot of trading volume. But in my mind, people are going to go for the cheap ones. They're going to go for Shiba Inu. They're going to go for HEX. They're gonna go for Floki. They're gonna find all the big low cap cryptos that are already on some exchanges, and they're gonna try to have them in their MetaMask wallet and try to get those airdrops on the PRC20s before that happens. So some people are speculating that it's not just HEX that will spike up right before Pulsechain release, depending on what Richard tells us, like how much information. But if he gives us a countdown and says Pulsechain will be conducting a snapshot in 24 hours, I think it's going to create a flood of buy pressure on the ERC20 tokens like Shiba Inu, HEX, just maybe even Ethereum. But Ethereum, I feel like having a bunch of HEX PRC20 versus one Ethereum PRC20 would be worth it.
Yeah, so as far as the fork itself, one Ethereum is one PLS, and one PLS has almost no value even when it opens on trade. You can see what the multiples would be, but that wouldn't be the same as an Ethereum's dollar value. So a lot of people are talking about, like you said, if you believe that there's a popular, especially if you have traded Shiba and you have some namesake of representing Shiba or Link or something else that's popular as far as the Ethereum products, Decentraland and other things like that might be something, then I can see some migration, whether it's the people that know that they have a free thing and then they're going to bond and pair, or whether they're just going to say, hey, I want to be a whale in a new system of this one product of Shiba or something. Like I can see that causing a buy spike. I think it's what's going to happen with HEX as well. Is people are waiting. They are waiting till the last moments. I don't know if that means that they all have dry powder or they sit in some other coin, or there's going to be some volatility. If Richard gives us notice, I don't know that he's going to give us notice. Nobody knows. He might even say it launched yesterday. Here's the link. Like, we don't know.
Are you familiar with Grayscale?
Yeah, so myself and other partners created a HEX investment trust, and it can hold HEX, and the same lawyers and the same regulators for Grayscale. We had to model everything the same as Grayscale. So yeah, when people talk about the discount and the premiums, and whether that's a good or bad thing for what the assets under management for Grayscale, if you want to talk about that, that'd be interesting.
Yeah, that would be interesting, but here's my thought about Grayscale. When I was trading Ethereum W, ETH proof of work, when it launched, I noticed that around $10 price range, Grayscale dumped their whole bag of ETH W. Like, market sold it. They market sold it, and then Alameda bought it up. Like, it went from $10 to $4. Alameda bought it and sent it up to like $13. So I feel like I don't need to go the Ethereum route for Pulsechain launch, because I think Grayscale would sell their PRC20. They would probably just dump that PRC20 Ethereum.
Yeah, so the interesting thing is the way that Richard has set up the ratio of PLS to Ethereum. So it's a 10,000 to 1 ratio. So even though everyone that has Ethereum will get a 1-to-1, they will get 1 PLS for 1 Ethereum. That doesn't mean that even if Vitalik dumps 300,000 ETH, or I don't know what Grayscale controls, it doesn't
3
actually
million.
have the ability to push the price of PLS.
Yeah, it's not going to affect PLS, just the PRC20 Ethereum price. They have 3 million. Okay. They have 3 million. So in my mind, if they can dump 3 million PRC20 Ethereum, I might be able to scoop that up after they sell, so I don't feel like pressure to buy it at the beginning. So it takes away that stress. That's why I tell people, don't hoard Ethereum before this comes out, because high chance Grayscale dumps their PRC20. For your holdings for your HEX.
I'll try and pay attention to your tweets for that kind of alpha. That's useful, just to think about things like these bigger institutions and such that hold whatever they hold. There's and there were a lot of people even in HEX that played a lot inside of ETH W and ETH Fair. I saw a lot of that kind of content as well. Yeah, so it's how did you said that you were started with like RuneScape and things like that, just as far as an interest in trading things. Was this anything of your family as far as like your TA education, or how did you go through this path to get to where you are?
Not really with my family, but towards like my path of trading, I was just always interested in stocks. Even when I was like a young teenager without a lot of money, I still found interest like reading stock news. When I was 16 years old, I worked at a restaurant, and since I lived with my family, I didn't have to spend a lot of money, so I could put some extra money in a portfolio. So that's kind of how I got started. One of my favorite stocks when I got started early on was Best Buy and then Nvidia. So those two stocks early on trading. And then I ended up going to college and studying in college, and then university I did information systems. So it's like business and IT. Mostly you do SQL programming and focus on databases. You focus on supply chain, stuff like that. But predominantly crypto, I like it because it never sleeps.
Yeah. It is addictive that way. You never have to have a closing bell.
Yep.
So there's other people that I think that you might be interested in, and maybe I'll do the same referral for them, because they do get into the charts. They do love this. Like I said, the time occupation of if you enjoy it, then it's something for your joy. What I don't like is people that, get addicted to anything that's destructive for their lifestyle. So as long as it's tempered, I was saying positively earlier before the stream, the reason that prices go up is because people speculate. And when they speculate, they can do it through a long-term buy and hold and support price, or they can ratchet up price, whether it's long-term or short-term, ratchet it up because it is trading. Trading is what moves prices. There's a narrative, of course, that Richard popularizes about not trading, but that is what got us to 10,000x is people ratcheting the price up over time. So I'm kind of, like I said, I'm cautious about how I support the narrative. And that's one thing that I liked about your tweet was, we can have conversations and we can have different viewpoints, and things that are anonymized on the internet, people just go off the rails. I noticed that far too often. So I'm glad that you're able to join today, and we're gonna have this conversation about kind of two different camps. What are your thoughts about do you want to have a speculation about a 2-year buy and hold of PLSX price as far as ROI? Do you have any speculative thoughts, or are you going to play the scalping game for 2 years to see where we're at?
I like the 100-day. I like the 100-day game. The 100-day game. Generally, after 100 days, you end up with so much buy pressure that people start to take massive profits. Today is like 106 days ago. I called the day one of the crypto bull market, for example. After 100 days, we started getting heavier sell pressure. People started taking more and more profits. The relative strength index was at the top level up there. We're at the peak of the bullish momentum on MACD, and then day 101, everything starts curving back down, cooling down, people taking profits. So I think the 2-year plan, if people want to do that, that's great. I did consider 2-year plan because I already earn enough of my trading that I don't need to access that Pulsechain money or that HEX money. And as an American, we get taxed an arm and a leg whenever we cash out. So I thought about maybe living in another country that is tax friendly towards crypto capital gains for like a year or 2 years, and then take profits when I'm in that country. So that is something to consider for the long-term holders.
Yeah, if you're going to play the game for a long term, I've been a Puerto Rico guy. A lot of people move to Puerto Rico that are in banking or investment. They go through the Act 20 and 22 for their tax, no 0% capital gains tax, and they are day traders. And then you already, I'm sure, are aware of, like, if you actually are going to expatriate and go to like St. Kitts or Portugal or Malta or something like that, or set up in Dubai. There's a lot of people as far as that. If you actually get to that jumping point, you talk about in the future. I got a lot of people that have done it. But yeah, it's like I said, the considerations for long term are, for me, are, for many, should be, do you enjoy the stickiness of trading? The stickiness is, I've got to be addicted. And I remember in 2017 and 18, when I was starting this crypto journey, it was making me stay awake at 1 or 2 or 3 in the morning. It was making me pay attention to charts and trends of, when markets open and cycles and things like that. And it was, I just, like I said, in reflection, once HEX came out in 2019, I have held a liquid bag, luckily, for things like Pulsechain or Pulsex. When those sacrifices came around, I did have some capital to do that. But I do like to set it and basically advocate the strength of a product, whatever the product is, versus day trade. So like I said, in real estate, it is one of those things where I like to buy, force up the equity either through the property improvement or the tenant improvement, and then just have a long-term hold, like a 30-year hold. I'm sure that's part of my psychology and why I look at it in this way. But again, I appreciate that people like yourself are out there. If you're giving, advice or advisement to others that they find useful, then I'm not as harsh as many about the necessary trades.
Well, sometimes trading, like I have people that they tell me that them getting in my Discord and trading has changed your life because it's changed the way they think. Like some of those people before they joined, they were like gamblers. They would go like 50 times long, no cross margin, was like $10. And they would lose like $10 like 30, 40 times in a day. But I challenge them to like work on their own trading strategy, try to not over leverage, and if they can't control the habit, just go to spot trading. Because for me, I can trade maybe like 10-20 minutes a day and make like $1,000. I don't have to trade more than that. I can look at chart setup, do my entry, have my exit plan, and get out with 1,000 per day. And I did this year, 2023, started with like a goal of just 1,000 per day. So far, I've already met that goal. So since I met that goal and it's already in February, I could take the rest of the year off, I feel like. So I'm not really addicted to trading. I just enjoy it. And I feel like I'm stuck to it because a lot of people may be relying on me for that technical analysis, or like I start helping this person learn, and I help that person learn. So then like I'm constantly in the community replying to their private messages. I can get anywhere from like 50 to 200 DMs a day on Discord. People asking me about their chart setup, what I think, are they over leveraged? And obviously, they already know when they're over leveraged. Like the other day, a guy was over leveraged on Doge. Even though he thought it was going to go up, he was over leveraged. And I was like, you need to close that position. And because he only had like $1,000. But if he didn't close the position when I told him to, about 3 minutes later, the candle just sank. He would have been liquidated and lost that 1,000. Another guy, his trading was like 30,000. Completely over leveraged on another token, but like I walked him through a strategy to deleverage so he could still keep his bag and make the profits when it goes back up. So, we have a lot of people on my Discord that always remind traders like, hey, look, if you don't know where the liquidity is coming from, you're the liquidity. You're giving that money to the system. You want to take the money from the system, not give it back to the system. One big thing that I've been doing on my streams lately is liquidation levels. Show them at what price people are going to get liquidated. And people usually like to take profits at the top of those liquidations because there's not much gas. Or at bottom liquidations, they go and buy it up down there. Lately, people have not been buying the tops, which is good. They've been buying the bottoms, causing the big bounces from the bottom, and then taking profits from at the top. My goal is to make the bulls cash rich. I know the dangers of shorting, and the bears can get wrecked very easily in the crypto space because we'll have a liquidity crunch one day. People will not be able to withdraw as much money from their bank to put into their accounts to defend their positions. We have people like Michael Saylor buying up large amounts of Bitcoin and just moving it off of exchanges so that Bitcoin pool will dry up one day. If the right people get in, the people that don't need that money right away can pull that Bitcoin off for 10, 20 years. The Bitcoin pool will dry up a lot. So that's what I like about trading.
Do you still, how much longer will you use Bitcoin as the reference when it comes to things like the climb before halvening, the after, as far as the trends, the rainbow chart? How much do you guide your decision making in alts on the quote unquote macro of these older coins?
Well, if it's real Bitcoin, not fake Bitcoin. Like FTX had fake Bitcoin they were selling customers, so their charts were all messed up. So if you're using the FTX charts, you might want to step away from that. But I'll always use Bitcoin as a reference. And as a trader, what you'll also want to look at, the SPY, early pre-market, and the mini futures, S&P mini futures. When the S&P mini futures is doing a run up, Bitcoin's going to run up at that same as that time, 3 o'clock in the morning when I should be sleeping. And about that 3:15, because funding rates get paid out at 3 o'clock in the morning as well. We get nice little run up sometimes because people were closing their shorts. And price went down a lot today that I know for a fact around 3 o'clock, if price is still down a little bit, people are going to close their shorts. And closing shorts on Bitcoin does make the market cap go up quite a lot. So Bitcoin will always be a reference for traders. You can't get around that. For futures trading platforms, sometimes you can do like Bitcoin as your counter instead of USDT. Most people use stablecoin, but some people use Bitcoin.
Are you paying attention to some of the other things that will fork from Ethereum onto Pulsechain? There's different teams that are leading. I think it's called GMX and Liquid Loans and Power City. They have all these different, futures kinds of contract stuff. Have you paid attention to that development?
Yeah, so I'm hoping that there is going to be like a good futures platform on Pulsechain. I like it because I can look at the liquidity. Like if it's really truly DeFi and futures, The only thing that scares me is that I've seen people try this before and they've all failed. Everybody that tries to offer futures on DeFi, they all end up failing at one point because there's a liquidity run. And after you get a liquidity run on a platform like that, people never put money back in. So that's the scary thing. FTX, after that liquidity run, after what they did, they would not get another penny from a lot of traders. So that's the scary thing.
That's true. It's almost like we have to have our own insurance fund. It's like I will, like you were talking about paying out from different platforms, having an insurance fund or a backup. Maybe that is for some these ideas of capital held back, or and maybe it's in a staking form on protocol or blockchain. So those kinds of things. But I didn't want to take up a ton of your time. I really appreciate that you joined me today. That I joined you today. I just had a little bit of a window. I hope we can have a conversation in the future, and maybe when Pulsechain launches during that window where there's no taxable events and things like that would be best. We can talk about, like I said, my strategy is still going to be the same for that Twitter and that Etherscan that you can see. Is I'm going to put capital towards maybe it should be, like you said, 100-day run. And then in general, a 2-year, I want to put a 2-year. So maybe I'll hybridize my own staking plan based on some of the tips that you've said. And I hope you'll look at, or your audience will look at the same thing about, what plays out in staking, the people that actually make money over long periods of time, if you do the math. So I just wanted to have a friendly chat, and I was glad that we were able to do this today.
Before you go, one question. The 20,000 USDC that you're going to put into Pulsechain when it comes out, what value do you think you'll get from that within 2 years? Like minimum.
Well, every launch, see, the thing is, like for the diplomacy role for me, like I feel like when HEX launched, Richard said, don't go on day one. People are still going to go day one. And they did. They went 20,000 ETH. So day 38 was the best day because all of that rush was over. So on that 20 grand, maybe I should hybridize about when is the market buy.
Why don't you do 1,000 per day for 20 days?
What'd you say?
1,000 per day for 20 days.
1,000 per day DCA'd for 20 days. That's a good strategy.
Because gas fees aren't going to be that high on PRC20.
That's true. So so I want to have something that I can promote and I can stand behind for a couple of years and say, well, this is what I did. And if I get kicked in the balls, I get kicked in the balls, and I'll take the shot. And if I get, mad win over trading, then that'll be promotion tool for me. Still, that's not my bag when it comes to, the donation or sacrifice or any of these other things. But it is capital that I put in August of this past year to prepare for the Pulsechain launch. So maybe a DCA strategy of 1,000 per day would work out best. I remember when Trayvon was putting 1/10 of an ETH into HEX every day, the first 100 days or something of its launch. And I think that worked out pretty well. So maybe that's a good strategy.
All right. Well, thank you for coming and speaking. I'll clip this and I'll send it to you on Twitter as well so that you can save this and look back in about 2 years as well about your Pulsechain decision.
Yeah. So on launch day, like I said, if you're going to stream or something like that, I'll try to join. But launch day will be where I'll really put these things to rubber meets the road. All right.
All right. Sounds good. Yeah. On the launch day, I'm not going to even touch my Pulsechain. I'm going to let it sit there because I know how chaotic it is. And I know how devastated I will be if I take profits on like a 10 times and I don't get the dip and it goes up another 20, 30 times. I'm okay waiting. I've seen the pattern of sets. I'm okay waiting.
Yeah, I think it's the same thing when it comes to that. That's why I was just talking about the market buy. If the market buy is launch day, Ethereum bridge open, launch day, then there's going to be like 2 days of no taxable. People are going to do ratio trading. I'm not planning to do anything there. The guy will get me all fucked up. And then when it comes to actually being able to bridge capital over in USDC, I guess, or whatever, into from Ethereum to Pulsechain, then like I said, like you recommended, I think I will do that. 1,000 per day for 20 days. It's engagement. It's my brain not thinking about my actual bag. So I think that's good. Thanks, man. I appreciate the recommendation.
You're welcome. Have a good night.
All right. Talk to you later.
Stream as